All right, welcome everybody. Liquid Sundays, Sunday, May 17th, 2026. It is almost 7:30 on Sunday night, and this is our Liquid Sundays SPX market overview. Your weekly market recaps. So basically, I posted this last night. If you're new to the server, please let me know. If you're enjoying the community, enjoy. Market update. Bond yields are rising worldwide, bringing back some market jitters. Stocks, S&P and Nasdaq keep hitting new highs this week on AI stocks like Nvidia, but Friday showed the first real signs of a pullback, exactly when we expected it. We might see a small 3% or slightly higher dip in stocks over the next couple weeks. Key levels to watch on the S&P are going to be below 7370 and QQQ below 705 would confirm it. This is just a normal healthy dip, not the start of a big crash. Those are my feelings. Stocks should bounce back strongly by July into August. Main risks: if bond yields keep climbing higher, it could pressure stocks more. So we're going to keep an eye on TNX. Gold looks to be solid. Good time to buy on dips. Oil is waiting on the Middle East news, obviously. Bottom line, be a bit careful short term and protect profits, but the overall bull market still seems to be alive. Can use any dip as a buying opportunity for a potential summer rally. So that's your, you know, three to 4 month horizon. That's what we're kind of looking at here. So, all right, let's jump right into the chart here now. I'm going to take this off here. Before we look at last week's SPX cash session candle, I want to show you something, and it's pretty remarkable. So here is obviously, we had an amazing rally. We had the bear market, after January 2022 into about October 2022. We definitely fell into bear market territory. And then obviously we came out, we started getting some rate hikes, and the market just absolutely took off. Obviously, we had a few minor pullbacks. We had Liberation Day, and then we had this recent pullback at the beginning of this year, and this absolutely remarkable rally, much like last year. I just want to show you this real quick. So, if you take your fib tool here and you take the breakout, okay, so you take your swing high here to the swing low here. You can see here break of structure that this candle from June of 2025 was basically a breakout of this resistance from early 2025, right? So basically, take a look at this. Ready? Swing high to swing low. A breakout from our resistance here from swing high to swing low. We literally rallied exactly, almost precisely, like it was on a computer program, right up to this 69.61 level. And what happened? We hit resistance here, right? We hit resistance and then we sold off here. Now, let me blow your mind one more time. Look at this, swing high to swing low. Pretty much rallied exactly to this 1618 level. This happens over and over again. I have gone back years. I've gone back to, the 70s. And you can find this happens over and over and over again. So, the market basically ebbs and flows. It works very much, on psychology of, powers that be, smart money. And the market likes to pull back to certain key levels and then bounce and rally and then basically go to like extensions. And the reason I'm showing you this is very much how I based a lot of my day trading strategies. Same type of kind of strategy and methodology. These are the patterns that I've noticed over time. It just happens so often. I mean, and you can't even make this up here because it's just insane, right? So like this this liberation day, basically sell off and then the rally, right? This thing found support, right here at previous resistance from the 22 bear market. You can't make it up, you know. It's amazing. It fascinates me. I love it. And I just love finding patterns, finding little kind of hidden gems. So anyway, so that's our basically, our break. I bring this up, let me just get back to, kind of where we are today. I bring this up because this rally now that we've, kind of broken out from here, right? We've hit that 1618 level, and it's hit it at the perfect time. It's really, um, you know, there's basically a lot of maybe hesitation right here that um, yields, bonds, and yields are going to potentially put pressure on equities here, and we'll wait for it to actually break down before we kind of start looking to go back short. I mean, we shorted this last year, no problem. We were able to play it back to the upside when it bounced, and we'll do the same thing if we get a pullback here, or I'm looking for basically at a short term right here, maybe like not maybe immediately today, maybe later this week or into Nvidia earnings, after Nvidia earnings, maybe 3%, maybe 5% pullback from the highs here, and let's just see what that kind of looks like. I don't know if we're going to get immediately back over all-time highs. This kind of looks like a topping, a little inverted hammer here potentially. So, but let's just play devil's advocate, and we'll just take the price range here. And if we take the top here and we go down 3%, let's just say 3% conservatively. We're looking at like 7,200, and if we get like 5% from here, we're probably looking at 7150 ish, something like that. So some levels to mark out, just in your mind's eye. If we do kind of break down, let's take a look at the daily chart. So I always start on the weekly. I go to the daily. What do we have here? We have something significant. Potentially we do have a close below the low of the high period, a close below the low of the high period. So if we go back, 20 bars here, this starts to tell us that, there's sellers coming in and taking price and closing it below the low of the high, which is significant. It's a John Carter kind of special here. And it's something that I always look for when we start to look for potential reversals. So, we might get some type of mean reversion here. But like I said, NVIDIA earnings coming up here. What am I going to look for heading into tomorrow's open? I'm going to look for, first things first, I'm going to look for, the entire week's candle here. And I'm going to take my fib. I'm going to say, all right, well, snap from high to low here. All right. Are we trading above 74.28? Or are we trading below or above it? If we're trading below it, I'm going to look to support here at 73.40. If we're trading above it, we can look to all-time highs. If we break out above all-time highs, I will look up to that 1618 level. Should we break down 73.48, high to low on a weekly, this is a longer term for maybe later in the week. 72.30 is kind of the breakdown of the extension here. So this is kind of the bigger picture, and then I just look at the daily chart. So I'll look back at the last day. Here's Friday, and I do the same thing here. So I plot those levels that I have as far as pivot, support, resistance. Take my fib tool from Friday, high to low. I've got resistance at 74.55, support at 73.97, and the pivot from Friday would be 74.26. So am I trading above this? Am I trading below this? I'll trade it into support. If I break down support, I'll look to the next extension here, 73.60. Okay, let's take a look at the hourly chart. Hourly chart here, we talked about, I always talk about, like, what kind of trend lines do we have to play off of? Um, simply take as many touches as you can on the trend. And I used to get a lot of questions like, how do you know like where exactly like that it touches and whatnot. The rule of thumb is you want to get as many touches as possible. And you can use wicks or you can go through the wicks and use the full body candle, but essentially you want at the very least you want 3 touches. But I found it helpful to just realize, like, listen, this is a trend line. Like, you start to see this over time, right? Like, you see like there's resistance up above here, right? And the same on the same kind of sentiment, there's a trend here, right? we were looking at this last week and saying, all right, well, we're bouncing off the bottom of this trend line, coming to the bottom of this trend line. Where are we right now? We came to the bottom of the trend line. Are we gonna bounce, fill this gap here? Nobody knows, but we can basically use this as a visual kind of guide to say, hey, we're respecting this trend line. This is a trend, and we're going to respect the trend lines until we break above or below them. That's basically, the trend is your friend until it's not. So we give it the benefit of the doubt. Now, if we look at the, so this is the SPX cash session. Now, if we look at the US 500, all right, let's take a look at the US 500. This is after 24 hour data. That was all cash session. So everything on the SPX proper is everything between 9:30 and 4 p.m. and this is includes overnight and all that good stuff, right? So something that was pretty interesting, I thought. Let me get this off of here. Hold on. Something that was pretty interesting that I thought was from, if you look here, so this is Friday, right? Let's take a look here real quick here. Um, this is right now. You can see futures is taking a little dip here, right? So now we're at basically 73.87. So we're below the prior week's pivot, right? So there's support here and there's support here. These are the next levels that I would look for, basically for the overnight, and then we'll see what happens. I mean, it's very early. It's 7:41, so take this with a grain of salt, right? But if you take the, I wanted to show you, if you take the daily level here from the US 500, what's pretty cool is if you look at the low of this candle here, this was 73.90. And if you watched last week's video, this was the key pivot to hold. Basically, 73.90 to 7400 was important last week to hold. So we're going to look for this level here as very important. I mean, right now, obviously, we're kind of trading right at that level, but there's a good chance that this is going to be significant heading into tomorrow, right? Are we trading above or below this? If we're trading below this tomorrow, depending on how far, we may try to gap to find it. But my first, um, my first instinct thinks that, and I haven't seen any of the news, I haven't really paid attention to anything, is that this is going to hold, um, and that we're going to potentially kind of rally, at least, let's say 50% of, of, uh, of this range here into Nvidia earnings, potentially back to all-time highs again. But um, I don't know if we're gonna get that immediate move. Like I said, this is going to be a real key level for me heading into heading into tomorrow and into overnight. So 7390, really important. Obviously, 7400 is a key psych level. Uh, so let's take a look. This always brings us back into our. We'll look at our Friday session. We'll take a look at the plan and we'll see how it kind of played out, and um, what was actionable, what wasn't, and when it made sense to trade, when it didn't make sense to trade. Um, so I'm going to basically take this 15-minute chart here from Friday. You can see this is basically Friday's open. This is the 9:30 candle. This is a 15-minute time frame, and I'm going to take Friday's plan. So all three plans always come out before the bell. And actually, last week I was feeling pretty generous. I put everything on X except for Friday. I think I took Friday off, but I posted all the SPX day trade plans Monday through Thursday because that's what kind of guy I am. But every week, every day, I post SPX, post ES, and I post the SPY day trade plan before the bell, before 9:30. So here is SPX plan. I'm going to post it right on the chart. Boom, there you go. Hopefully everyone can see that. Everyone can read that. I'm thinking. I'm hoping. Hold on a second here. Let me grab this again here. Yeah, 515 right here. Copy. Hopefully that's big enough for everybody. Can you read that on the chart? You want to make it bigger? Let me know if you can read it. Let me know if you want me to make it bigger. I can do that too. Looks okay. Okay. So I like to use the 15-minute when I'm kind of mapping out and framing out the day's plan. And depending on if we're trading outside of the previous day's range or above or below it, kind of makes a difference. Um, but I'm big on price action. So obviously the plan is real important, but understanding price action and how to trade it, that's kind of what I I preach and teach. That's kind of my bread and butter. It's interpreting what is price doing at these key levels, right? Because you can have the key levels, but you may not know what to do at the levels. So um, I have I have some nice little kind of visuals here. New York AM, New York PM, Asian session, London session. This is basically just telling you, what significant price action occurred in the previous sessions. And you can see here, I'm going to show you, a few things that are kind of important to understand when you're trading the plans, right? So London session Friday before, there's this order block here, and this is real significant here. This is this is telling you that basically, we've got a trend to the downside here, and there's basically, you know, bearish order blocks, bearish flow coming in here. So, when we get back up into these levels here, you really want to be kind of vigilant and aware that you're trading back up into these significant levels that are going to act as supply, right? Same thing on the downside. Excuse me. When you have bullish order blocks, you're trading back into bullish order blocks on the downside. If you're in basically, long story short, if you're in a long here off the plan and you're starting to trade back into one of these bearish fair value gaps, bearish order blocks. You want to raise your stop. You want to trim. You want to de-risk, right? Because you understand that this is going to act as likely going to act as supply. And I think on Friday I did post in either the main chat or in the premium chat. As we were kind of pushing back up, I'm saying um, we're getting back into that order block. So trail a stop if you get up here because you don't want to give back any of your green if you can avoid it, right? So, how did I come up with Friday's plan? Let's just take a look here. So you got resistance 74.66, right? So let's just use this little arrow tool here. 64.66. Can you see where I got the resistance from? I got it from this area right here. So when I'm looking at this, as we're kind of heading into the bell, and I'm noticing, bullish order block in the London session. I'm sorry, bearish order block in the London session, bearish fair value gap. You can clearly see this is acting as resistance here. So I'm thinking, all right, 64.66 is my resistance, and then support is 74.08. 74.08. Where do we get where? What's the significance there, right? So before the bell here, I'm just taking this, basically this support right here. This is 74.08. And the reason I use that, because that is the most recent support, before this impulsive move into the bell. Very difficult to try and catch this momentum, once you get into the bell. But um, you know, so if you look at the basically the pivot here, 74.37, 74.37 is right around here. All right. And basically I'm using 50% of, the range. Basically I use 50% of the range that I, find that I deem the most liquid from the previous either session, two sessions, previous day. And this is how I kind of find my levels here. So, and then I basically make my plan above it. I make my plan based around it. So above. Um, let me make this a little bit more accurate. Here you go, 64.37. Okay, so it's about 50% here, right? And so if I'm trading, below this level here, I'm bearish into the support level here, and then break down below. I just use my fib tool right there, and the support comes in at the 1618 there, right? So we had a pretty choppy, obviously open here, a little whipsaw, kind of getting you going in different directions. But essentially the um the support, we dipped below support, but by 9:45 we kind of recovered it, and then you get this like bullish engulfer here, right up into the pivot. So I like to kind of highlight this stuff. Here's a 5-minute chart here. It's usually we're day trading this stuff on 5-minute time frames, right? But basically, you want to trade. I want everyone to kind of understand that a very simple mantra that you can have whenever you're getting into a trade. I don't care if you're trading options. I don't care if you're trading futures. Just remember this: you want to technically go long at support if support holds, and you want to basically sell at resistance. So you long at the support and you sell at the resistance. So the resistance is the pivot in this case here. And then, if you get a significant, rejection, you can trade it back into the support. You trade, basically long from support into resistance. You play short from resistance into support. Keep this in your head, right? If you're trying to go, if you're trying to go long in the middle of a range, or extended from a range, if you're trying to go long, right, as you get kind of into the pivot without like true confirmations, um, it can be painful because you get on the wrong side of it and you actually, you buy the top, right, and then the thing reverses on you. So keep that in mind. Buy it support, sell it resistance, buy it support, and that kind of keeps you safe here. Again, I also like to talk about, the 12 p.m. session um, is usually not that directional. We did get a nice little, kind of directional push here from support into the pivot. We did also, reclaim the pivot. It looked like, you know kind of looked like, um, and we brought this up in the chat, and we're kind of speculating, like, oh, maybe this is a inverse head and shoulders here. It kind of looked like that, and but as we kind of started reclaiming basically the pivot, which was resistance earlier in the day, we start getting up here, and I'm saying, all right, well, we're getting into this fair value gap. There's this order block up here. So if you are long, make sure, make sure you set a stop and trail your long, because you get a reversal right back down here. It crashes back down here, back into support. And then once it gets that back into support, you're trading right back down into the extension there. So that was Friday's kind of plan breakdown, kind of how we traded it. If you're trading options, obviously, short term, short term. Um, if you're trading short term, I'm sorry, expirations. You have to be. I always say this: you have to be really right, and you have to be really right away. You don't want to linger out in zero SPX zero DTEs on a choppy day, because theta is going to kill you. Especially if you try to get in early and you chop around. So I think that, to be honest with you, I mean, you can certainly play SPX options efficiently. It's better to obviously always have more time. You can make a living on SPY, um, but I think I found that futures is probably, and while it's not for everyone and not really everyone understands, it's the easiest to kind of understand as far as risk versus reward and stop loss, stuff like that, right? So most of my plans I try to formulate on between like a third, like it's ideally, well, let me say this. Ideally, my favorite plans are like between 30 and 40 points. Why are they? Because it becomes so mechanical that, I'm taking, basically, like, give you an example here. This range was obviously a little bigger. This was, uh, 54 points. But regardless, if I'm longing support here and I'm trying to capture, 27 points, right? So I'm trying to capture 27 points. I'm going to let's just say, just robotically, I'm taking the long here off the plan, right? I'm longing support. I want 27 points. I'm going to set my stop at 14 points. Um, that's like baseline, okay? And it's very easy to understand that with um, it's very easy to understand that with kind of futures, but it is a little bit more difficult to play with options because of the kind of drawdown on the contract, right? Like, you can kind of understand what, points, but when you get your drawdown on your contract, um, it can be a little disheartening. So, because you don't really know what to expect. That's kind of what I found in the past, and kind of people have a hard time, and why people kind of get shaken out, right? Because they're kind of like trading their P&L, which you should never do. You should essentially know what you're risking, how much your stop is gonna, how much money you're gonna lose when you hit your stop. You need to already kind of have that in your head, right? Um, but if you're trying to trade your P&L, and you're over leveraged, you'll never ever trade, without a high level of stress. That's no way to trade. So the plan is kind of just designed to, like, give you like a really good idea. Okay, if I go long here, I'm gonna try to capture 27 points, and my stop is gonna be 13, 13 and a half points or whatever, right? So I mean, it could be anything. If you and even if let's say you are a scalper, all right? Let's say you're a scalper and you only want to catch 5 points. Well, if you're if you're legitimately aiming for 5 points, then your stop has to be 2.5 points. If you're trying to get 10 points, your stop has to be 5 points. That's it. I mean, that's literally a professional mindset. That's all there is to it. Whatever position you're taking, you're risking one, you better be aiming for two. All right. So, um, I just that's real important. That I like to kind of stress, So, but getting back to, like, my plans ideally, I like 30 points. I like targeting 15 points, and I like risking seven. Right. That's kind of an easy um, way to look at it. And when you look at it that way, right? People, like, I think they have a hard time understanding, like, that you're not gonna win every single trade, and that you're gonna lose some trades, which is fine. But if you think about it like this, like, if you know that you're gonna lose, right? And you've already planned ahead to take the L, and that you're gonna minimize your casualties, then essentially you were right. You were right ahead of time. You already had a plan to get out. And that's the way that you need to kind of look at it, because the 7 point stop, you know, is nothing compared to when you never want to double down. You don't double down at your stop loss, um, in hopes that, there's going to be some catalyst. There's, hopes have no place, should have no place in your trading plan, in your trading regimen. We just want to trade robotically, and try to minimize and reduce emotion. So, all right. So hopefully that was helpful. Friday wasn't a Friday was a choppy was a chop X day, and we kind of expected that. And we had a lot better trades throughout the rest of the week, to be quite honest with you. So that was Fridays. Let's clean this up here a little bit. I'm gonna stop the recording here, and then we'll look at some. I'll take some questions. Joe, I see you got a question there. Hold on a sec.